Let's see you. Fabulous. We good?
Yep, we're ready.
Hey. Like my gavel? I know, it's weak, man, I'm sorry. I didn't want to usurp your fine gavel work. Welcome to our December audit committee meeting. Chris, why don't you pull a chair up here to the table? Everyone, this is Chris Fulber. He is one of the citizens on our Citizen Budget Review Committee that we just formed on Thursday night. And we'll talk about that here in just a little bit. We'll begin by a thought, a prayer, a pledge of allegiance, or a prayer, and pledge of allegiance.
Father in heaven, come before thee this night, grateful to be here to conduct the work of the city. Ask thee please inspire us to do those things that benefit the citizens, and grateful for living in this great country and have the freedoms we have. Say these things in Jesus' name. Amen. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
You want to introduce yourself so everybody knows who you are?
So I'm Gary Keddington with Keddington and Christensen, and this is Ben. Ben is one of our managers, and he's been helping me with this engagement to be able to help get all this done, because I can pull all the sorts and directions and make sure that someone's here taking care of you. So Ben's been, and he lives up here, and he doesn't have to travel as far as I. So that's really nice too. So he's been helping a lot on getting everything ready, and so that's.
Thanks for that introduction. Okay, we'll go to our consent agenda. Item number 1, discussion and or action to consider August 25th, 2022 audit committee minutes. Everyone's had an opportunity to look at those minutes. Any corrections, additions, deletions?
I made one addition, I don't know whether you've been informed of it.
We added he wanted to add it, that he made a comment, and so I've added them in. So I've made his correction that he asked for.
Okay. Anyone else?
I wasn't here, so I'll stay at the moment.
I seek then a motion to approve those minutes.
I move that we approve the minutes of August 25th.
Second. Thank you. Moved and second. Any discussion? All in favor, say aye. Aye. Any opposed? Passes unanimous. Item number 2, first active agenda item, public comments. Chris, you're the only one here tonight.
We're recording too, so.
And we are recording, yes. Anyone online, Susan?
You would see it right here, doesn't look like it.
Oh, there it is.
I brought him in because he's in the next conversation here, so you all can see.
Okay. Welcome, Citizen Burns. We're grateful to have you with us. Okay, we'll go to item number 3, discussion on the 21-22 fiscal year audit. Our presenter will be Jamie Jones, our illustrious finance director.
Thank you. I don't know if we would start with Ron first, or if we want to just kind of review the audit first. I know that he's really busy.
Let's start with Ron in respect of his time.
Okay.
Thank you. Can you guys hear me okay?
Awesome. Thank you so much for letting me be here. Thanks for letting me be here and virtually. That would be a long drive in the snow, so I appreciate you letting me stay safe in my office and doing this over Zoom. Grateful to be with you tonight. Like I said, my name is Ron Stewart. We're with Gilbert and Stewart CPAs. We were contracted to do the audit of North Ogden for this last fiscal year. So what I'd like to do is just take a couple minutes and explain to you what we do as auditors, the conclusions that we come to and how we come to those conclusions and what that means for you. And then we can ask any questions or dive deeper into the financial statements if that's needed after. So what we do in a city is there really three areas that we look at. We want to make sure that the financial statements that you have in front of you are materially correct and you can rely on those numbers. The second thing we do is we evaluate internal controls, and we want to make sure that those are designed, implemented, and effectively working. And then we want to take a look at certain areas of the state law prescribed by the state auditor and to make sure that you're in compliance with those. So that's really our job, is to come in and make sure that the financial statements are reliable, make sure the controls are designed and working, and then make sure that we're following the state code. So how we accomplish that, as far as the financial statements, we take the books of the city or the trial balance, and we perform a number of procedures on that to make sure that those are materially correct. One of the best ways to do that is to send a confirmation that says, this is what we show, this is what an outside third party shows that is the same balance. We send those confirmations out for cash, debt, and major governmental revenues. Great way for us to see, does the cash match, or the revenues that we're reporting match with what was sent by those institutions. During the course of the audit, we pull a significant number of invoices. At the beginning of the audit, we pull a sample. We look to make sure that the check and the invoices are matching, that there's proper approvals, that it hit the general ledger in the right period and was posted to the correct accounts. As we're going through the procedures, we pull invoices for accounts payable, fixed assets, credit cards, other liabilities. It's a good way for us to see what's happening and make sure that those transactions are being properly recorded. There's a significant number of calculations on the financial statements, and we spend time recalculating the balances. We look at those in relation to depreciation, payroll accruals, compensated absences. Want to make sure that those calculations are correct and reasonable. And then we do a lot of analytical reviews. At the beginning of the audit, we'll look quite extensively to see what happened during the year, how that changed from last year, what changes, what challenges that presented. And that helps us to design our testing and gives us a good sense of what's going on, and then we can ask questions and dive deeper into those. As we're testing balances, we look at those again. For instance, if we're testing cash, we'll look at this year's cash, last year's cash, see what happened, see why there's a difference or a change, and ask those questions. And then as the financial statements are being completed, we do that a third time. We look to make sure, kind of on a high level, at the financial statement level, is there anything that we see that we haven't addressed yet? And we make sure that we address that. And then there's a significant number of other procedures that we perform to make sure that those financial statements are materially correct. So through our testing, through our observations and the procedures that we went through, we were able to come to the conclusion or the opinion that your financial statements are materially correct, and you receive an unmodified opinion, which is a clean opinion or the best opinion that you can receive. And you can look at our audit report in the financial statements under the opinion paragraph, and it reflects that. The second thing, as far as the internal controls, like I said, we want to make sure that those are designed and they're implemented and they're working. While we don't give an opinion on internal controls, we do evaluate those to make sure that they're meeting those criteria. We do that through interviews, walkthroughs, and questionnaires. We want to get a sense of what's happening. Well, as we're testing throughout the other procedures, as we're pulling invoices, we're also looking to see, are those controls being followed?
We'll pull samples of payroll and some of those things to make sure the controls over those procedures or those areas are being followed as well. If there was a portion of the city that just had no controls or those controls were just not working at all, that would be considered a material weakness. If there were areas that have controls where those controls had just become ineffective over time or were not being followed, that could be considered a significant deficiency. So through our interviews and walkthroughs and questionnaires and the procedures that we performed, we didn't feel there was anything that rose to the level of a material weakness or a significant deficiency. So we feel that your controls are adequate, that they're working, and that they're safeguarding the assets of the city. And then the third thing that we do as auditors is look at state compliance. The state auditor gives us certain procedures to perform on an annual, every 3-year and a 5-year rotation. And we look at those to make sure that you're in compliance. So this year, what we looked at is budgetary compliance, fund balance, fraud risk assessment, justice court, restricted taxes, government fees, cash management, and Utah retirement systems. So the state auditor says these are procedures that we want you to follow. We follow those procedures and give feedback. The only finding that we were able to find this year is that we overspent in the general fund budget. We overspent our debt service, so we spent more than we budgeted for. State law says you have to make sure that you budget for more than you spend. So that was one minor compliance issue. Overall, it was a great pleasure to work with the city. We think they're doing a great job. And I would be happy to answer any questions or entertain any more comments.
Yes, Mayor.
Chairman, I do have a couple questions. Some of the other cities I've talked to, as the state auditor has come in, they're trying to enforce, they sent out a memo on this about revenues collected for planning, et cetera, not exceeding costs. And they seem to be pretty big on that in their findings. I don't know if you had a chance to look at that in our situation or not, but apparently they are trying to make issues out of what they feel has always been the law. So I don't know if you had a chance to look at that, or if we just take kind of our chances and see what happens when the state auditor comes for a visit. But some cities have been found in non-compliance with that.
The challenging part with that is that there's really no legislation that's in existence right now that's requiring the city to do that. I think it's a great idea to track those revenues, to see where if your costs are meeting those. I have a hard time because I'm not quite sure the rationale of how we're calculating those. And so we haven't really addressed it. We've asked the city about it. We've kind of brought it up, but we weren't really pushing the issue yet until there's really some guidance that'll tell us how those fees are being counted. And if there's some legislation behind us doing that.
The auditor sure believes there's legislation behind it, but I'm not that much of an expert. I just know that the auditor feels like they have a firm position. Just a couple other questions I have. We believe in full transparency. I was just reading the management letter that I just signed in place of Councilmember Swanson. But we do have a couple commitments out there that it's fairly voluminous, so I'm not sure I got everything, but we have a few legal obligations that I couldn't find in here. One of them is or 300 or 400, whatever it is. We've got an obligation to pave this parking lot over here as part of the negotiations with the county when this library was built. We have an obligation to pay that. We think it's to be $300,000-400,000. It's a somewhat of a legal obligation we have. We have kind of a lesser one, but I really think in substance, we're pretty committed to it. And I bring this up because this is part of the reason we're trying to build our capital projects fund and make sure we have funds to meet commitments. But we've pretty well got an agreement down here on this park in Providence Point that is probably close to $1 million out of the general fund and probably 300,000 or 400,000 out of the stormwater fund. I don't know, we may have a more binding agreement on the parking lot over here, but in substance, we're pretty committed down here. Patriot Point, yeah, Patriot Point, excuse me. They both start with a P. I mean, it's all, and they're close, they're not that far away.
The new park that we're doing.
I was like,
So I don't know what, I just, we just want to be totally transparent in this because, we are building funds to meet these type of commitments. It just came to my mind as and nobody called me and asked me, so I probably should have before I read the management order.
Signed it.
We can make it now.
The company tension, and I think it's good in here, because I've always believed materiality is not necessarily a dollar amount. You could have a $500 profit, but really, if you have a $500 loss, people look at it differently.
Yes,
right?
yes.
So anyway, I just wanted to make you aware of that. I'm more than happy to do whatever we need to do. The other thing that concerns me a little bit is, we've got a big public safety building going over here. We've got the debt on the books. We've got construction in progress. But we really don't have a maximum cost contract. We kind of do. But we're finding, significant change orders. And, we've got a commitment to finish that building. We're hoping,
Yeah, I mean,
we're watching it really close, but I mean, we've got to complete that building.
Yeah.
No matter what we do.
you're in the same boat as every city. Seriously, everybody is going
What's it
back.
cost them?
Yeah, they're all going back. If they bonded for a $5 million building and it's $8 million. So they've now had to go back and get a second bonding. I mean, all sorts of things are happening because the costs, nobody has a clue what the cost is going to be. Even, engineers aren't even coming close.
Yeah, I understand
I
that.
mean, they're trying to do their best, but
well, and I've heard too that they're catching on to the ARPA money,
they're doing what?
catching on to ARPA money.
Yeah.
So costs are going in.
Yeah, government let money out of it.
Well, there's lots of cash out there, so why should, yeah.
But anyway, Ron, just, I could footnote that at the bottom of the management letter if I can get it back from Jamie.
Of course, yes, well, it definitely lets you have it back. You can add whatever you need to.
There you go.
Were you aware of those obligations when you conducted your engagement?
So we're not the auditors, right? He's the auditor. We're the ones consulting with you guys. And so just
Were you aware of it? Thank you. Were you aware of that when you conducted the engagement?
I don't know if we were to that extent. And I'll be honest, it's been a couple of days since I've looked at it, so I would probably need to dig into it a little bit more before I can give you a better answer on it, but
Because
yeah.
before we say that we're compliant with the act, we gotta make sure that that's all in there.
Maybe just a little more under commitments and contingencies or something.
Well, we can include things in the footnotes that we just want to be totally transparent on. It may not necessarily be absolutely required. You know, just to be
Transparent.
100% transparent. If you get into somebody that, you know, really wants to read footnotes. I mean, that's actually what brought down Enron. Stuff that they disclosed in their own footnotes. You know, they're like, hold the phone. So, yeah, I mean, it's just like that we.
And I'm fine either way, I just want you to know about it.
Yeah.
Well, I guess what I'm asking is, are those, since governmental accounting is not my forte, are those, so for our consultants here, are
Yeah.
those disclosures required to be recognized and are they?
The only one that would be required possibly to be put in would be the parking lot, because if you have a signed agreement, you have a commitment. But remember, in accounting, just because you sign a document doesn't necessarily mean that you have a transaction. You have a commitment, it's not a liability yet, because nobody has actually performed anything. Because you can always go back and renegotiate different things, and so until somebody actually performs, there's no liability to the city side of it. We have a commitment that we have to write down. The other one, if you haven't got any construction going, these are plans that you've got to do, this is what you're doing. Well, you have a lot of plans in the city. If you go down your capital plan, you've got probably 10 million, 20 million that you could spend if you had to, right? So you don't put those down until you start to really get it all.
They're contingent liability.
Yeah. And see, and nothing's really happened yet that I think you need to put that one in.
Which one?
The park one, if you sign an agreement on the
Oh, yeah,
parking lot,
we have a signed agreement on the park. Basically, what's happened is we exchanged ground for waiver of fees. Impact fees, and we've been waiving impact fees.
so you've got the ground,
We've got the ground in our name.
and did that get put in?
It's been like 10 years.
So
It's been a
that's
while.
probably been in there
Yeah,
a long time.
It's
then,
been a
yeah.
long time.
And so if you've got those in there,
I'd say-
then,
They
Pardon?
be exchanged.
No, the disclosure, the fact, we're about as committed as you can be to build that park. Because we own the ground
We own the ground.
and we've been waiving fees.
until you get the contract where somebody's going to actually start building it, that's when it would
That might
happen.
not be in my lifetime. the way things are going.
Yeah, see, that's exactly why you wouldn't put it in, because
Federal
it
government's
could be,
involved.
Yes.
it could be forever, it could take a long time. You've got the asset on the books for the park and land. Now it's just gonna sit there until you can do something with it.
We do have the ground on there, don't we?
Yeah, that's listed as the asset.
I'm pretty sure.
And how did we listed the liabilities as fee waivers? What do we do?
What you
That's
normally
correct.
would just take as revenue, because what you've done is you actually did get the fees, technically, right? And you bought the land, you had an exchange. So you got revenue on the fees and you got the assets, what you got. So you,
As a payment in kind?
yes, in essence, that's what's happened. Yeah, because you just swapped it. You still have to recognize what would have happened.
We got the land up front and the
Then the
waiver
fees-
of fees are trickling in like, okay, we don't, you know, that's taking years because it's.
Kind of like what we were also doing with the Marriott.
So there,
situation.
the commitment to build it,
Yes.
does that have a timeline?
That was my question. That's a question for
It
John.
did have a timeline, but they needed some amendments to the agreement. And as Councilmember Swan said, the federal government is involved in this, issuing the grant. And they're like dragging their feet like crazy. So we did amend it to extend out the time frame. I think another 2 years. But John, if he was on, could say, I know I talked to him about trying to tie that to the grant. Because, you know, we don't want to come out of, because we don't get that grant, we're committed to 4 or 5 million.
Fund park costs.
I mean, I don't care if you put it in there or not, I just want you to.
Yeah, no,
just, since my signature's on that piece of paper.
Yeah, Ron, we might consider putting the one contingent, the commitment that we have on the parking lot, but that would be just to add a part of the footnote, just one little part.
The parking lot has to be finished by this June, is that what I
Is it this
remember?
fiscal year?
We moved it out of here.
Yeah, it was supposed to be,
County agreement, moving on.
yeah, I think it's July 1st of
I was gonna say, it's-
2023.
that's when it happens, the
July 1st of
300,000.
2023 is
Yeah.
our obligation to complete that.
Okay.
So whatever. Those are-
Yeah, I think that's fine to go ahead and put that footnote in there if we need to. I think that makes perfect sense.
Okay.
So
We'll
I'm comfortable
we'll
with
add that into it. That's good. Thank you for letting us know.
Once again, I just want to be extremely transparent,
Yeah,
and where that ties into the fact is why we're budgeting like we are to build the capital projects fund, because we feel we have these obligations we're going to be facing,
yeah.
and we're kind of anti-unfunded commitments. We don't
Yeah,
make
we'll
sure
add that.
commitments are funded.
Anything else, Mayor?
Do you have any other commitments, Susan or Jamie, that we ought to know?
Parking lot's the only one I
Shaw
really would
Shaw
consider.
family, the park at Shaw's,
Century Farm, yeah.
Century
The
Farm.
Century
Shaw
Farm,
Farm.
the Century Farm one, yeah, because they did give us the money up front on that one or not yet.
No, I haven't seen the
The 100,000.
contract. I don't know if it's signed. I don't think it's even done yet.
On
I
the
don't think
development agreement, it's.
We
it's
have the
signed.
development agreement, but I think that was maybe in the spring when they could start doing the,
Yeah,
I
we
think
got,
there's a timing
Yeah.
issue with that, that it wasn't until they actually started construction.
they haven't built everything.
We have to get John on that, because I was asking the other day, because they're not doing anything. We don't want to be putting the park in before they get
Yeah.
there.
So I can't remember the timing. 'Cause there
We
was-
It was
haven't-
2 years.
We
initially.
haven't recorded everything on that property, like it hasn't, it's gone through some of the process, but it's not fully ready
Those
to
are the
build.
only commitments I'm aware of.
Are you aware if the contract is signed?
The development agreement was signed.
Yes, we signed that.
No, the contract for the donation and with the.
That's in the development agreement.
It is in the development.
I'll look right now.
With the date.
can you tell me when that was?
Yeah,
signed?
let me double check really.
Because if it's not signed by the end of June, then
I think it was.
I can't remember when we signed that.
My folder.
that would only come into effect if it's in effect before June.
Felt like we were
End of
still
June.
talking
So I
about it.
had,
It was on.
So we can find it, though. We can find it,
Investment.
and we can add that in there if it needs to be.
so our development agreement for park improvements was done on July.
Good.
Okay.
Perfect.
They signed June 27th, the mayor and I signed July 13th.
Thank you.
So-
It's straddled.
Also, the developer signed it in June. we signed
And then
it-
by the time they got it to me, so there you go.
Yeah, there you go.
It's sort of like that warranty that comes.
Pay attention to that more often at that fiscal year, right?
Yeah, be careful of that.
Don't straddle.
And on that part, Mayor.
It's good to get it on the radar though, so at least we'll be prepared for the next year. So
Yeah, yeah.
we'll definitely have it ready for next
It
year.
would be if we built the entire thing on our own. Without the grant. We don't
Without
have
the
to
grant.
build the whole thing.
Without the grant, yeah.
Yeah, all we're absolutely committed to is a detention
Detention
basin
bond, yeah.
with grass and sprinklers. So,
I think they're in the agreement that says we are obligated to the park.
Right,
Well, then we're gonna have.
What-
to
what do you define as a
definition of
park?
which, no.
That's the thing. I don't know. We don't have-
park or sprinkler water in the park.
I'll look it up. I'll let you get it to you guys, the Patriot Point one. It's been a while, so I do not remember.
Okay, any other questions for our auditor, Mr. Stewart, or any comments? His comments.
just appreciate, that's a lot of work that goes into it to get a.
It's one of those jobs that I look at and I go, I'm grateful that there are people that like to do that.
Well, we're grateful for these guys that came
Well,
untied the Gordian knot from last year, right?
well, that's what I was gonna say, is if you think, remember 2 years ago, where that was not a real fun meeting? And when you look
How
at,
many audit exceptions did we have? I was trying to remember. It was like
it
a
was
couple
kind of
pages.
it was a
That
kind
was
of a
like
small
3 years
novel.
ago, wasn't it?
Don't ask me when. It was
It was kind of a
not
small
long
novel,
enough
what it
ago.
was really, it was quite a few pages, yes, to say the least. And to come down to one,
Good work.
and one that's, it's,
Minor incident.
yeah, it's really not a huge issue. Hats off to Jamie for really what she has pulled off. It's-
Yeah, if I could kudos that too. Amy does a great job. I think the city's in good hands. Kennington Christensen, they do a great job of coming in and really being a support to you guys. It makes our jobs easier as we come in, and because we're just auditing the city, we're not trying to unravel things and do accounting work. We're just coming in and doing our jobs as auditors. And so I think you guys are in good hands going forward.
Thank you, Ron. Anything else you'd like to share with us?
Nope, just thank you for letting me be here tonight. Appreciate it.
Hey, if you need to run, we understand.
Awesome. Thank you so much. Have a good night.
Okay, committee, let's move on to item number 4, discussion. Yes,
Could I ask for just a second before we move on?
yes, sir.
I was in that meeting 2 years ago, and I was just, and one of the questions I asked, and I don't remember his name, but of the gentleman that was sitting there, was whether or not we even had the internal capacity to fix those things. That's why
I remember that question. I remember very much that question.
And reading through this, I would just like to say that I think in the short amount of time that it's been, it's very impressive, the turnaround that we have in the way that the report's been prepared and the lack of exceptions and those kinds of things. For the record, I would just like to say, having asked that question then, I'm very impressed with the outcome this year. So well done.
And I would offer up kudos to the council who made the additional investment that I think was being sought for years, so Jamie could do the job. So the council did approve in the budget some additional resources, so these things could happen, so kudos to the council.
Sometimes a city grows gradually and you don't realize when you're over your head. Yeah, right. And finally you have to recognize it.
Can I add one other thing?
Yes, sir.
I didn't give you a very good answer last year when you asked me a question about the county service fund that I said was a plug. I'm sure you all remember that very comment, right?
On March 17th of this year, we passed an ordinance banning the word plug.
Because if I have come up with a simple way to explain it if you would like me to. If it's not a big deal, but it has sat on my mind for a year.
You better get it off. You better go.
True account, yes, sorry. But if you would like,
We'd like you to get this off your mind.
would you let me just
We know
purge
you
this?
will sleep better if you do, so please, Gary, go ahead.
If you will allow me.
Absolutely allow.
So what it gets down,
In fairness, you were dealing with a lot of things back then.
yes, I was, but it was,
It was a different feeling in that meeting.
yeah, it was. We weren't laughing a lot. So really, what happens is with an internal service fund is that departments pay money into that fund to take care of, say, a fleet. In a real simple terms, is if your general fund put in $100 and your water fund put $100 in, you'd have $200 in there. Now you spend $100, and if you spend it equally on, 100 on one vehicle and another vehicle, that's one's for the general fund, one's for the water fund. That's all simple. Unfortunately, the accounting rule is when it's all in the consolidation. So when you bring this all together, they say, well, you can't create revenue and expenses to yourself. And that's normal accounting. You know, you can't sit there and just create revenues by selling to yourself, but it makes it look like it. No, so you have to eliminate all that, right? In consolidation. The problem is in the private sector, consolidation works out really simple. You put all these columns together, you eliminate everything, you got a final column. The problem in government is that there's not one column, there's two columns at the end. So what happens is you take that, say that now we've spent $100, we got 200, so we've got $100 left in cash. 50 of that, say 50 of it is for the water fund, 50 is for the general fund. And you think, well, why don't you just divide it back out and give it to them? Because we know what it is, but we don't. They have you take the entire $100 and put it to the government side. And so you go, uh-oh, only 50 of it was theirs. So they took 50 of the water fund. Well, that's where all of a sudden you have a payable that shows up and says, yeah, you owe them back the $50. And then the water fund has to set up a receivable that says you owe us $50. That's where that comes from.
You're all familiar with Schrodinger's cat? It sounds like Schrodinger's accounting. It's there, but it isn't.
It all works out in the wash.
Well, I mean, it's all in the funny way that consolidating government versus in the private sector. It's simple in the private sector, there's one column at the end. There in government, they want to have it broken down in governmental activities and your business type activities. And that's where the problem comes in.
Another example of that, I think, Gary, is the city used to kind of count as revenue, that administrative fund.
Yeah,
Yeah, now we're
Yeah.
adding it again.
yeah, you
Which
can't,
is
you can't
kind of-
create revenue.
Yeah.
Yeah,
Because that would allow you also to have more in your general fund.
Yeah.
Balance, right? At
you would think
35%
that you
revenue.
were able to spend more, but you don't have it.
Yeah,
That's a really good way of going broke.
yeah, it's creating revenue.
Yeah.
You know, like unfunded depreciation, for instance. Right, Jamie? But-
So thank you for letting me purge that.
you know,
I will sleep much better.
And we are grateful for the year that you spent on it.
You know, I can't believe I told you guys, that's just a plug.
Hopefully it'll leave this year having that same something
Yeah,
for the
yeah.
next year.
You know, there's only so many super important things you can worry about, you know, and you had all of those.
know, but that- for some reason,
Sometimes
that
you
is
just
stuck
have to
with
put
me.
one over, like,
Well,
I cannot worry
because
about the
when you
explanation
make the
of
comment
that.
like you, something like that, can you actually say that? I mean, really, a plug, you're an accountant? No,
I
thanks.
just call them HOKs. Heaven only knows. But
So-
I think it's important for, you know, the committee and citizens to understand. You know, that was one of the major increases in the police budget this year. Is, as Jamie has done all that research with, I'm sure you guys' help. We're now trying to properly depreciate those assets, so when it comes time to buy new vehicles, you know, we're not scrambling to.
Yeah, you funded it,
Cash.
because that's what you're
Yeah,
doing.
through depreciation,
Yes.
basically, we're funding
You're funding your next purchase.
the
That's what
next
you're doing.
purchase, and, you know, I think that's one thing we're gonna have to continue to look at, because we got a bit behind, wouldn't you say, on the depreciation and funding? So, you know, we may have to look at that and say, you know, how do we catch that up? So, but
So, sorry, but that begs a question for me.
Mhm.
In the end, the city takes its enterprise funds, its proprietary funds, and consolidates those all into one set of financial statements, correct?
Mhm.
So if I have done what you just talked about, then I have a governmental fund that has a payable, and I've got an enterprise fund that has a receivable. When you consolidate those into the financial statements, do those eliminate?
Yes, on the very, when they come to the total, but they end up having to have a payable and a receivable on each one of them. And then when you come again to come to the actual total city, yes, that goes away. They come up, they come on the same line.
So it is all out in the wash.
So it does, but it does, you
it
have,
kind of does.
they sit out on those
Depends on
financials.
what level
though.
you're looking at, okay?
They look real, yeah,
I
because
find-
there's three different levels. That's the problem. There's three different sets of financials. You got the, you know, enterprise funds, then you got your governmental fund financials, then you bring them all together. And then you convert it from doing virtually a cash basis of accounting in the governmental, you have to convert it to a full accrual basis so that it all can be compared together and can brought together. Because you couldn't take an enterprise fund and a governmental fund and combine them if you didn't convert them. They wouldn't make any sense, right? So
Financial reports put together by a political committee, not parents.
Well, you know, private enterprise has 3 sets of books too. They have the one they give the auditors,
young boy,
they have the one for tax, and then they have the real one.
then the real ones. There we go.
Google Translate.
Thank you.
Sounds like something to keep accountants busy.
It's
Yeah,
complicated.
it does complicate things. When you see them, you kind of go, oh boy. And that was the hard part is when we first came in that they were not done appropriately. Yeah, and they are tricky, but they make some sense when you do them.
Item number 4, discussion on quarterly financials. Yes, we are. Did you have more? Sorry, I'm number 3.
I was just gonna point out a few things on the audit.
Sorry, go ahead. Sorry. Yes, please.
You, please
We
highlight.
spent way too much time on this. Oh, boy. Don't even bring that up.
Footnote 9.
That will be pension moment. Yes,
Oh.
holy smokes.
Nobody can understand that.
That's why they're sitting there.
Go ahead, Jamie.
I just wanted to point out on page 4 of the audit, basically just kind of go a little bit through the management discussion and analysis for the year. That the net position for the city increased by 7 million. And I'll explain a little bit more of that in a minute. And also I wanted to discuss about the general fund, unassigned fund balance on here. I know that it does say it's 31.5%, but please keep in mind that this is like a liquidity number. It's using the expenditures instead of the revenue side. So really our fund balance for the current period is 23.5%. I just wanted to make sure that was pointed out on page 4. And then on page 14, it kind of is more of a breakdown. I just wanted to point this out. I won't go through all of it, but this is basically where that tells you how we came up with the $7 million in that position increase. And what this is doing is kind of goes along with what Gary was just talking about. We look at all the expenses for both the governmental side and the enterprise side against the charges for services and shakes it all out. And then you can see at the bottom where it says changing that position is where we came up with the 7 million. So I just kind of wanted to make sure that this was a case that you guys were looking at. I don't want to go into too much detail unless you need me to. And then also I want to point out on page 17. After all said and done for the general fund, we came out about $529,000 ahead of budget. And that is how we get to the 23.5% fund balance. So council will be making some decisions in the upcoming budget of what to do with that. And then also on page 21, this one is the utility side. They're halfway down the page where it says net operating income or loss. Overall, the funds did pretty well, but when we look at operating loss, particularly I want to talk about the water fund. It is coming in at a loss, but I do believe that is based on the depreciation expense. There's only 800,000 that was budgeted there, and it did come in at 871. So, and then also, so sewer fund looks good, stormwater, and then we did budget for that deficit in the stormwater. So make sure that we pointed that out.
Is that stormwater or solid waste?
Excuse me, solid waste, thank you. I was looking at stormwater. Yeah, solid waste, thank you. And then on page 22, about 2/3 of the way down, it talks about total cash and equivalents. So these are our fund balances within those enterprise funds. So I think everybody is still pretty healthy. Those are just some of the things I want to point out.
Jenny, if I could add, just, somebody might look at that balance in the water fund and say, what's going on there? That's we got a lot of ARPA money in there, right?
With the 5.3 million,
Yeah,
so that one, it's only half of it, about 1.2 million is ARPA money.
there.
But I do believe
But we're actually putting all 2.4 in there.
2.4 in there, yes.
But we've got a 2 million gallon water tank we've got to build.
Yeah.
That is not cheap, but it's kind of impairing some of the development in that part of the city because of the entitlement the state has for water availability. And so we've had to kind of put some hold on development in that area. So that has been accumulating for some time, knowing we'd have to replace that tank. That's why the balance is substantial.
Is that a replacement or is that a building?
It's a replacement. We've got a 500,000 gallon tank.
It's in a new
To replace
location
your
though.
stand.
It's really close to the current one.
Yeah.
We're just in the process of negotiating the property so that we can put it there, but it's very close to the current one.
Yeah, just to give you a little insight on one city I'm working with, which is drilling a well, $800,000 for one well.
We've got what, a couple of cap, about $400,000 a pop.
Yeah, so I mean, that looks big, but it boy, it goes in a quick.
The one we did up, the well we drilled up 1050. That was, what did we spend? Were you here then? Yeah, that was $500,000.
Yeah.
Yeah,
that
Just
is-
short of
Now we're gonna-
600,000, and that's without the well house and
The pump and
everything. That
everything.
was just to get to the water, prove
Yeah.
the water and get it sleeved, get the bore sleeved. And
That's the one we're gonna,
that's the one we're gonna put in.
we verified it's producing adequate water as projected, but. Yeah, so
Crazy, crazy.
water's big time problem sometimes.
Running water,
Hmm.
it's a big deal. I know, honestly, and how complicated it is, and some people get how complicated it is to actually turn on your faucet and have water come out of it.
Really, yeah, I don't know if there's other questions or I don't know.
Any questions for Jamie?
if You guys want to add anything? I just appreciate Gary and Ben. Ben helped a lot this year. He took our shoes this year, so thank you.
And just to, because this is somewhat of an education meeting for our.
I'm sorry, I didn't give you a copy before I began.
But that 529,000 over what we budgeted was a result of property taxes coming in a little bit higher than, is it 7% over budget?
So it's
And expenses are
it's-
not being assigned.
not property taxes, it's more.
Oh, sales tax, I mean.
Sales tax, thank you.
Yeah, sales tax.
Sales tax and then.
Property tax.
I don't know. I was gonna say
That's a
property
pretty
tax,
fixed
usually.
number.
That's sales
Sales
tax.
tax came in about 200,000 more. We also did not spend a little better than 250,000 on road projects. And then just the departments coming under amount of their budget, so. Into the department. So there's a little bit of mix there.
Wonderful. Anything else before we move on to item number 4? Okay, we'll move on to item number 4. Discussion on quarterly financials. Would you like us to?
You're welcome to.
We love being.
Are you all out? If you come like that.
I'd like to have an executive session on footnote 9.
Well, so would I.
Do you remember that? Do you remember the county school budgeting for?
Is that the biggest waste of time? I mean, there's so many other things we could put in there. But we don't.
Okay, committee, let's turn time over to, we'll turn the time over to Jamie to talk about our quarterly financials.
Quarterly financials, right, I mean, this. Right, so in our first quarter, July through September, which means 25% of the year is lapsed. Our general fund, so this first slide here is just our major funds for our revenues and expenditures, and our general fund at 20% and revenues at 23%.
And what is revenue,
Wow.
20% versus 25%?
25%, so we have, you want to know why building permit? Building permit, well, actually, so overall, building permits and some of the, the intergovernmental, haven't come in. They kind of come in when they come in. And then, our property tax, in fact, we just got today. We just received our big chunk of property tax. So, the 2.3 million. So, we've got notice on that. So, yeah, next time, hopefully we'll show much better. The aquatic center, 39%, 41% expenditures. Just a reminder that their season is Memorial Day through Labor Day. And that does straddle the fiscal year. So they're a little bit high because their season is right there in July through September. So. Water fund, 27%. Even their impact fees are not doing so well, but the actual utility billing line is about 25.5%. And then just a reminder that we did move the water impact fees into their own fund. Just like we handled with the stormwater and the sewer impact fees, where before they were mixed in with this revenue. So we did do that correction like we talked about last year. At the end of November, though, the impact fees, we were at 39% water impact fee. I believe that has to do with is it Patriot or something?
Prominence.
Prominence. Our expenditures are better in line right this year from last year. Last year, if you remember, we had a lot of water line breaks, and then we have had those extra costs for pumping. And so I think that, we pretty much leveled out this year so far. The sewer fund overall, this fund looks great as well. Revenue at 29% and expenditures at 27%. Stormwater 29 and 30%. This one, the stormwater is where we've done some preventative maintenance on the back truck. So that kind of seems to be a theme this year. Solid waste at 26%, 29%. Again, this fund looks like it's on target. The transfer station fees are high in that fund. Something that I need to talk to Dave about. I don't know if it's going to be an ongoing trend or not, but gosh, they're a little high. And then we have purchased around 70% of the replacement cans that we're budgeting this year. So I don't know. I'm not quite sure why we bought some cans. Do you know?
I wish it did.
Oh, okay, you seem like you did. So yeah, jump in. Right, any questions on the slide? So the next slide is a closer look on the general fund revenues. Like I said, for the general tax, we just received our property tax distribution in December. Licenses and building permits at 20%. they do, building permits are making up most of this 20%. So like the other, like business licenses and whatnot, those notices go out in December. So we start collecting those in January. Intergovernmental revenue, again, that's BNC road money. We did get 119 this quarter. Last year we got 117, so still on par there. Charges for services, this mix up recreation, time checks, zoning fees. They come in as they do. Same thing with fines and court fees at 22%. Not terrible there. And then the big one is miscellaneous. So this one originally, the overall for this particular, I want to say department, but revenue, miscellaneous revenue, we're at 211%. But in talking with Bryce, we decided to break that out to show that miscellaneous revenues are 101, and then our interest earnings are at 324% of what was budgeted. So we actually only budgeted $20,000
Is that because of the interest?
for the year. Yeah, and it's because of the interest rate. So we're currently just over 60,000. But that is before, that is, Bryce talked about
That
it.
the interest rates and also the CD.
So, no, that's before that,
That's
before the
before that.
treasuries, but I'll have Bryce
The
talk
treasuries,
about that. Yeah, so
okay.
this is just PTIF and then also business strategy.
To Thing's point though,
So,
we did have the bond monies sitting there earning interest too, right?
yeah.
So rates, and then we took the bond down, which I think was 1.98%.
Nice time.
Yes, and we're earning. Well, Bryce, why don't you go ahead? You're the.
So-
Go ahead, Bryce.
In our PTIF currently, our current rate was just under 3%, which is really well. Usually it's sitting at like 1, sometimes less than that, depending. And so the money that we were able to have from the bond and our other, cash on hand that we have in there was able to generate a lot more. I think up here, so our,
It sounds like an enterprise fund.
yeah, we generated $138,000 just off the interest in the PTIF. The rate was 2.08, and now the current rate is just under 3, and I actually think it'll be over 3 by the end of December. And then on top of that, with the mayor's guidance and help, we also purchased 2 treasury bills. So those are basically one of the investment options we're able to have under the guidelines of the Money Management Act. So our first one will mature on December 29th. And that one we bought for that 1.487 million, and what will get returned is 1.5 million with a yield of $12,000, which isn't bad for 3 months. And then the bigger one, which is our one that'll mature in March, we purchased it for 1.95 million, and we'll get 2 million back for a yield of 37,000. So the one we'll see in the next quarter, we'll see that come in, and then the quarter after that, we'll either see 1 or 2. I'm gonna buy another treasury bill in the next couple weeks, so you'll see that probably in the last quarter of the fiscal year. But with rates where they are, it makes sense to sort of invest the money where we can get a higher yield. So I'm looking at some other strategies also, so hopefully we can keep going. They do anticipate rates will probably hold after February, so we'll probably keep doing this, and next year, the end of next year, you may see them start coming down, but.
The yield on treasury is over 4, right?
Yes, yep, our yield on treasuries, so the one I'm looking at purchasing hopefully in the next week, I think it was 4.3, somewhere around there, so really good rates. No, that would be a 6-month.
I was gonna say, the rate curve right now, the 6 month is the high point of the rate curve. So,
Yeah,
What we've done is to make sure those mature within our fiscal year, so we don't get in this market,
Mm,
market deal with rising
Jerry
rates.
says, thank you.
Yeah, no, seriously.
So
That's all we're trying to do.
by year end, they'll be much matured out, so we don't have to worry about the market.
This is the good side of inflation and interest, I mean, it's actually.
yeah. Yeah, so, does anyone have any questions about these type of investments? And they're very secure, pretty liquid, 3 months, 6 months. So that's what I've been working with.
Just having it sit in a hole making 1%.
Well, it's PTIS up quite a bit, too, so it'd be making more no matter what, but we're trying to maximize the yields there.
Sounds like you're doing a smart thing there.
Thing, especially since, like, I think most of that can go to construction costs increases, so it's like.
Well, basically, right now, our interest earnings are covering the interest payments.
Yeah.
And a little bit more on the bond while we're building. And so, yeah, it's helpful. But we've been very cautious, knowing this is one-time money. So, and then what the council decides, it'll be used for one-time projects. Start building that into your budget, and all of a sudden rates come back. It's no problem. So good work, Bryce.
Thank you.
Awesome.
Right, and then I think just the last one on there, maybe this contribution and transfers, we haven't done. Or transfer, or, oh, you want to expenditures. Oh, I was just gonna make a comment on the revenue side, we're at 9% there, and it's just because we transferred the money from the RDA over as part of the budget for the WFRC projects. So, how much going on there? Expenditures, pretty right there with the 25% level. We'll just talk about the not the outliers there unless you have other comments. Council, really, that's just because we do a the subscription and membership to the league right at the beginning of the year. So that's quite a chunk of the budget. Non-departmental, that's the liability insurance. And then Parks and Rec admin, that's cherry days. We're 88% of the charity fund expended. And then recreation is because of the programs that are in full steam right there at the end of September, like basketball and football. So those are why those ones are a little high. So any other questions?
Did you?
Oh, we pay for our liability, the city's liability insurance right out the gate, like July 1. Yeah. Should we get a discount for payment like that? I wish.
No.
It's just required. You just have
I
to
wish.
require
It's fine. Yeah.
Yeah.
Like our snow.
You have to pay your vehicle, your property, your liability insurance. It's a huge bill.
Mhm.
Right at the very beginning.
Yeah,
Yeah, we see that spike every year.
yeah, it should level out. And then next slide, and then our sales tax for the quarter, we're at 7.5% higher than budget, which is about 77,000. So I like this. I think that we're closing in on that gap as far as projecting sales tax. We are getting better at projecting that. So go ahead.
We like to stay conservative and so.
Well, sales tax, when you look at sales tax, it's kind of one of those that, one of your revenues that have kind of inflation proof. In the fact that as things cost more, then you get more in sales tax. So even though it's, some people, the buying might slow down a little bit as things go, be more expensive. But when they do buy, it's more expensive, so you get more. So it's kind of an interesting the way that works with sales tax.
Our two biggest sales tax contributors are also the grocery stores. And having been in that business and still seeing on a couple boards, units are are down, their increase in sales is not tracking inflation because people are buying less. In fact, I'm not sure, we've got a pretty strong economy in the state, but I just heard a report that one of the reasons the market was off so far today is November retail sales are the lowest they've been in months. So, it kind of,
Yeah,
you're right, there's an offset there, but when people start cutting back on spending, it doesn't track directly with inflation.
Which is what the Fed's trying to do.
Yeah, it's intentional. Yeah.
oh, yeah, oh, yes, it's stopping from spending. It's effective for me.
After you spend all the free money that's. That's a long discussion.
Anything else,
Just some financial or finance department updates. I just want to give a shout out to, I say she's new, but gosh, she's been here almost a year now. Christy, who's our accountant. She does a good job of keeping me in line, and I think everybody else in line. She's been managing our sales tax exempt status with all of our vendors, and just making sure that we're all doing that properly with our spending. We're also looking into our processes and other things in the finance department, just to see where we can improve. There's always room for improvement everywhere we go. And then in one particular thing is we're looking at a P card system. I don't know if you are familiar with that. It's the purchase card. I don't know if you're all familiar. No. Okay. So it takes place of a credit card. Do you want to talk about it?
Sure, yeah.
Okay.
So it takes place of the credit card, and there's a lot more controls in place for the city, so we can kind of control, well, hopefully, in theory, we're in the early stages of it, but we'll be able to control who's spending what money where. We can give access to more cards. It'll also cut back on fraud because we won't be receiving invoices from vendors or people or invoices that look like they're from vendors that we know, because it'll all be done through this card system. And it'll be a lot better than managing the 5 or 6 credit cards that the city has. We'll be able to pinpoint who's actually doing what. And the controls that we can put in place will be very extensive. We'll have to get receipts as soon as they swipe the card, in order to submit it. So hopefully it'll help with Christy and Jamie and controls, and it'll help us in our also internal control things. People aren't spending money when they're not supposed to, track, when we're spending what money. So I think it'll be good. So we're going to set up we have a demo set up in January. So we'll be looking into that, and hopefully it'll cut back on our risk of fraud, as well as make accounting a little easier for all parties involved. So.
And you have experience with P cards, right?
yeah, and credit cards. I'm not a fan of credit cards. But
Yeah.
But yeah, it's really important because of the whole process of just putting the buy something on the card. When you think about it, it almost bypasses all of your controls if you don't have controls in there. Because when you swipe that card, you're going to pay it.
Right.
You owe it,
Right.
and be it one way or another, the city still owes it, even though you weren't supposed to buy it.
Right.
So there's the control we also talked about of people not accidentally using it for personal use. That can happen. It does happen, actually. People make mistakes.
And that's put that Ferrari on my first.
Yeah, I mean, and it's a difficult one because once is probably a mistake, twice is it, third time is it?
Once is it?
Yeah, no, so I mean,
My husband, yes. I was like, oh, but normally we would put stuff, the business stuff on our personal one. And then it just made a paperwork hassle that he didn't like to get reimbursed for. So we ended up just
you were donating.
donating it. Yeah. Exactly.
And you said mid-January, we have that demo.
Yeah, January 9th.
Has somebody coming to make a presentation?
Yes, Wells Fargo will be coming, and then from there we'll probably start the RFP process or see what's at least involved to see if we need to. We'll probably reach out to a few other banks anyways, just to see what is comparable, see if one has more features that we like or is more useful. The other thing I forgot to mention about the P cards is that the bank will do the tax exempt instead of us, so it'll take a little bit of load off Christie. So it'll be good.
Will you let me know when that is? When
Yeah.
Time and place.
I'll forward you the invite.
I'd love to.
I'll be interested to see how much that costs. They can't do that for
No, they can't.
just the swipes. It's gotta be.
Plus, a lot of vendors use that P card, the city gets money too.
The city gets money.
Yeah, because when you're paying with that card in your private enterprise, we get money back by paying with that card. We accumulate quite a bit of
Your points,
points
yeah,
or money.
or cash, yes, some have cash.
We figure the credit unions can take care of that for us, so paying for free.
Well, I'm obviously familiar with that environment. I'm curious. So that Wells Fargo is gonna give you points?
We haven't got to the benefits and everything that works yet.
That'll be one of the things
Yeah,
that
you're
we're
right.
comparing.
Yeah. There's always a fee on
But in fairness,
it. Sorry.
You are not the
so
customer.
America First or other credit unions that I'm aware of don't have business payment cards like that.
Yeah, right.
Well, yeah. I do.
We need to talk about that. We'll have a little discussion.
Any other comments or questions about our quarterly financials?
I had one. I pulled this off of the financials. And there's probably a real simple answer to this. But in this one on page 5, it says down here, you get the general fund, you got period actual and year-to-date actual. And shouldn't that number be the same? In other words, you're only 1 quarter into the year and it's the first quarter, and so.
So this one would show for September. So the period actual will be September. Year to date would be the quarter. So July
So
through
the first one's a
September.
month. each
Oh,
month.
just a month.
Yeah, it's just each month.
It's just for
Oh,
September.
okay, gotcha. I knew there was this
Yeah.
simple answer. Thank you.
And I do have, what are you doing?
No.
I do have a question on your sales tax graph. Do we get any lift from the internet sales that,
The whole, that's why we're where we're
Yes.
at. We get it where it's delivered.
okay, all right.
Yeah, that was like, that was a revelation. I was like, whoa, really? It counts as city, in city purchases.
Stay with the past that, so this would be, because during the pandemic, as you know, everybody kind of started shopping online and it's kind of stayed.
2013.
Yeah, it was later than that. Yeah, yeah, it was not too, in fact, seemed like it was just before the
It
pandemic.
was just.
Wasn't it just before when they did that?
Amazon was the big one.
Because there was the court case.
Yeah,
There was a big court case.
Wayfair court case.
so I mean, timing on that was exceptional, actually,
Yeah.
Oh, yeah. Cities would be,
from the city standpoint, from a purchaser side. it's kind
There's a
of
lot of online shopping.
Yeah.
of course, you know, there's always that thing, did you purchase something from out of state?
What do you mean on my income tax return? Yeah, I feel that
It
every
has a
time.
3% compliance.
I always figured that out.
Huh?
I always figured that out. Now I don't have to. That's awesome.
Bless you.
Yes.
There's too much work for me.
Yeah, it's like, I don't know.
I was a brick and mortar store owner and I fought for that for years.
Yeah, it was unfair. I mean.
Yeah,
absolutely.
Sure.
You could go buy diapers in addition to the cheaper price and not pay 7.5% sales tax. You automatically, you know, it was just unfair.
Well, it's your brick and mortar places that are donating for these, all the city events that we do and everything else, and then they're punished, you know. by
That's the
the
Amazon.
Wasn't right.
Let's move on then, item number 5. Audit committee meeting schedule for the coming year. I believe we've been meeting on the 3rd Thursday of the first month or the last month of each quarter, is that correct?
Looks like
So our
this
next one will be
here.
the 3rd Thursday in March. correct?
Oh, yeah. Yeah.
It looks like last year we
do,
did
like,
February.
February.
Yeah,
Sure
we did February the last time.
It just feels really weird to be like talking about September and we're all the way in December and 2 weeks away from second quarter. Like I just feel like,
The
maybe I'm
third-
wrong, I don't know.
Are
But
are you
for some
saying
reason-
the 17th?
You want to have it in February.
February
Yeah.
It would be the 16th of February.
That'll be in South Carolina. But I could die on that. Outside board meeting.
Lucy, that's not like golf.
Not for me, but for some
I'm
people.
not.
I'm not a golfer, but I know a
All
lot
that
of
an
people. do.
off-site board meeting.
There's some islands out there that have some pretty nice golf courses. So we can do it. Excuse me, getting all choked up over that thought of not being out to play golf.
You could play for me.
You gonna pay for the trip?
Yeah.
You mean that over up to Ogden?
I'm not the whole week of the 19th, so.
So the 16th of February then, and you could zoom in if you so
I can
desire.
try. Obviously, I don't have an agenda for that.
Right.
I may be
I
talking
probably have another
actually.
commitment. That's my 45th wedding anniversary.
Is that how the first week of
I mean,
March?
I know you're disappointed, but.
How about February 2nd then, or the 9th,
February 2nd could work.
or the 23rd, or April 2nd?
So should we start on February 2nd and then we'll
February
go
You
from
know
there?
what? I can call in the 16th. I
Well,
don't know.
But Mayor,
And I think
Maybe.
I'm
Not
not.
Maybe.
The second-
Wedding
the
anniversary.
second will
I
be
think
on
I'm
my
on the
wedding
16th.
anniversary.
Oh.
How about the 9th?
The 9th, I will be out of town.
so another the 23rd.
Grandma.
Virtual.
Apparently.
The week of the 19th, you're not in town. Okay, so we're gonna do it on the 2nd, and that way we avoid one trip, but not all trips. We avoid an anniversary. And those that can't be here in person can Zoom if they can.
February 2nd.
Fine, yeah.
February 2nd.
Okay, I'll double check everything and then I'll send out the invite.
Okay,
And we did schedule it to keep it quarterly on the
pardon?
meeting schedule will continue quarterly. So
Yes.
I have a request. Would you just, the email you send out or whoever, could you just send those dates out so I can get them on the calendar? Whatever those would be. Or is it just that?
we kind of do it one at a time to see what people's availability is unless we want to look ahead.
Some off-site meetings.
All right.
You know, we can join you.
You might come with me.
I think that's a good idea.
Is that the Miami
You can be this way. In Miami, when I'm taking my daughter to the NHL All-Star. Game. NHL, yeah. NHL, not the Pro Bowl.
In April, we could probably do one in Moab along with the Easter Keep Safari.
Yeah, there you go.
Offsite audit committee meeting, right?
Yeah. You'll be there anyway, right? Yeah.
I'll be offering free rides. Okay, item number 6, public comments.
I just had a question. So when you talk about that slide,
Just state your name for me.
oh, sorry, Chris Pulver, North Ogden president. So you have 25% budget. So if it was, everything was perfect, it'd be 25% across the board, okay. But then, but you have expenditure revenues all blue, but yet that's not 25.
So the other slide is just breaking down just general fund. So we took that 20%
Okay,
and said, this is what's going on in each of the
okay,
funds.
because yeah, 'cause it had 20, they had 25%, that's why I was confused as to the titling. Okay,
That's the composition
of what the 20% is. Okay. Which just doesn't. Okay, yeah, because it worked. I used to be in Northwood for a while, did a whole bunch of stuff for the government. So we had not just this stuff, but EBMS, which I don't know if you guys know about, but that's basically taking the schedule and putting it into money and telling the government how much you're spending per month, and it's This is, I'll say simpler, but
It is.
anyway, okay, that's it.
All right,
We lost our online group,
oh, we did.
so we have no one left.
Oh, okay.
So Chris is it.
Google Translate wasn't working.
People start asking questions about the budget, and I start explaining what happened, and I see the guy was glaring over, and like, and I'm pretty enthusiastic about my explanation too. I didn't find this absolutely scintillating.
Gary and Ben, just so you know, our citizen budget committee is the subcommittee of this committee. Randy Wynn has accepted the responsibility of being the liaison between this committee and that committee. And that subcommittee is comprised of 8 citizens who have volunteered to just be another set of eyes looking at our budget as we go through our budgeting process over the coming months.
Back time, I may have done a no-no. I wrote the message, mayor's message this month and talked a little bit about that. Said, I'm sure the committee would like any citizen input and we'll be publishing how to get a hold of them next month.
Good.
Chris is like.
This would look like a
who are you
good
thinking about?
reflection.
Public services, key word is public.
Right, access to.
With the public part.
Let's just say the wife already has a list.
Gary, anything you'd like to add?
No, thank you.
Thank you both for all that you've done.
You're
Seriously.
welcome. You're welcome.
It, for, being the old dog on the council, that Gordian knot was a lot bigger and thicker and tighter than we ever imagined. And we're grateful that you undone that for us.
That is nice, isn't it?
It is a comforting place to be. Grateful. Worth every penny we paid you. And then some.
Yeah.
And the mayor's paying the extra.
I haven't even sent her a bill yet, so that's what you're perfect.
Maybe at least we go over.
Okay, any comments from staff?
No.
Thank you.
No, I'm good.
Okay, committee members, anything from individual committee
I
members?
just, again, congratulate Jamie on passing off this big project.
Yes. Awesome.
Yay.
With flying colors.
Okay, I have nothing. We'll look then for a motion to adjourn.
Also moved.
Yeah, it's tradition.
Oh, is it? I'm sorry.
No, I just took it
Just
over
second
from
it,
Cheryl.
you're good.
Second.
You're seconding?
She actually moved at the same time, so.
Okay, so
I second.
move in second.
There you go.
I apologize.
We're adjourned.